Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Good afternoon, Kelvin, and welcome to the show.
Hey, hi, good afternoon, Brian.
Now, Kelvin, before I get your insights, let's take a look at how the markets in the region have been performing this morning. We've got the SGX, which is at 3,114.25. It's up 0.32%. The Bursa Malaysia is at 1,581.13. It's up 0.04%. Across the Nikkei, it's at 28,115.03. It's up 0.25%. Shanghai Composite is down 0.29% at 3,500 and 0.86. The Hang Seng is at 28,382.02. It's down 0.75%. The Australian Stock Exchange is up 1.31% at 7,022.8. And rounding up the numbers, we have the Kospi, which is at 0.49% down at 3,157.38. So a very mixed bag across markets in the region. Walk us through some of the reasons for that, Kelvin.
Okay, because primarily, right, if you look at the current situation now in the global stock market, it's more likely driven by, number one, firstly, it's a bit of negative feedback loop from a kind of not really a direct related asset class to global equities. It's more related to the crypto space, but it's more like a psychological behavior impact. So if you look at how the markets actually behave over here, is that especially in late Asia session yesterday, so we start to see a very steep plunge in Bitcoin, and it starts to spread over to the rest of the other coins like Ethereum and the smaller cryptocurrencies. Then you start to see a very significant negative feedback loop into the equity space, especially on the European stock indices, the US stock indices, that is the stock futures, we talk about the E-mini and the Nasdaq 100 futures that are trading at that point in time in late Asia session yesterday. Then also on top of that, we also have this fear of inflationary pressure, global inflation pressure that will start to creep up into the real economy, that some market participants have started to actually question the ongoing Fed mandate to actually keep its monetary policy status quo, which is pretty much relaxed right now. And so that's the kind of two driving forces that actually driving this kind of lackluster movement on the equity markets yesterday. But what I see positive over here is yesterday is towards the closing session, right after the release of the Fed minute. Later we can talk more about the Fed minutes. So after the release of the Fed minute, you see the Dow Jones, the S&P start to actually close off near the session high, and where they actually reacted off a key technical support level, which is their respective 50-day moving average. Okay. And also what's surprising over here is if you're talking about inflationary fears coming back into the market, but the Nasdaq 100 is actually the outperformer last night in the US stock session. They actually closed off positive instead of negative. So it seems to me that it's a bit of a knee-jerk reaction, more of the from the cryptocurrency space, that is spilling over to this the rest of the risk assets like global equities.
Yeah, because you see, Kelvin, one of the things which is interesting is this morning we had a slew of very good data. Now, so obviously yesterday we had the Japanese consumer Japanese business sentiment at an all-time high over the last 2 years. Japanese exports this morning, data came out, rose 38% in April compared to a year ago. Now that's much higher than the 30.9% expected by a Reuters poll. Australia had unemployment numbers which declined to 5.5% in April. That was below expectations. In fact, expectations were for about 5.6% unemployment rate. And we had good data out of China as well, when they said that basically they're going to keep lending rates unchanged at 3.85%. So you're right. I think that negativity, there's good data that's out there that's supporting this global growth story in terms of exports and recovery. But sentiment-wise, because of Bitcoin and cryptos, you've got negativity hanging over the market.
Yep, precisely.
But how is this playing out in Singapore? Because Singapore has just gone into lockdown measures. And how is that going to impact the Singapore Stock Exchange?
Yeah, so if you look at the Singapore, okay, let's we take it one step. We try to dissect the situation over here. So what you see over here in on last Friday, where the Singapore government first announced this mini lockdown in Singapore, the benchmark STI actually plunged pretty badly, about intraday about -3%. Then towards the end, it trims towards the close, it trims slightly lost, but still at -2% plus. So that intraday decline on last Friday was actually the worst for the STI since we're talking about since last year June, somewhere around that period.
Okay.
So it's about a year or so, about 12-month period. So what's interesting over here is that it actually kind of create a bit of deep buying into the markets. Why? Because from the way you see the start of this week, from Monday all the way until even today's price action, it actually managed to reverse off last Friday intraday losses of -2%. That was the worst loss since daily loss since about 12 months ago, which is last year around June. So that's kind of create a bit of deep buying into the picture. So there's still kind of pockets of liquidity in the Singapore markets that are looking to actually bargain hard. All right. So this is how the price action actually evolves. And how does it react? It's very interesting. It reacts off a kind of a key medium-term support at 3,050, 3,010 level. All right. So market seems to be pricing ahead, saying that this ongoing actually mini lockdown in Singapore is actually good for the local economy to actually currently try to actually clamp down or to actually arrest this rising unlinked cases. But definitely this is kind of a wild card, you see. So going forward, what I foresee over here is that the next 2 weeks, starting this week will be pretty much crucial, because we need to give a bit of lag time since the latest kind of a stringent measure that was announced last Friday. So these 2 weeks, we got to monitor the amount of unlinked cases in Singapore. So if this amount of unlinked cases Singapore starts to go down pretty significantly in the next one week or so, so we may start to see this bullish sentiment starts to pick up in the local stock market, the Singapore stock market, which is the STI. So the intermediate resistance I'm watching at is that this 3,155 that actually recently actually kickstarted that kind of 2 weeks of drop prior to the latest announcement that was being announced last Friday. So if you have a daily close above 3,155, in terms of probability, it may start to skew back towards the bulls here.
Okay. Now I've got to ask you about the significant event overnight, which is the release of the Fed minutes. What's your view on that?
Sure. Okay, so if you look at the release of the Fed minutes, right? The headlines media number is people are saying that hey, there is a couple of officials kind of talking about tapering going forward, because they say that because of they may need to talk about tapering. But however, on if you look closer, in dive into a minute, there's actually certain pockets of officials, right? They're actually wanting inflation to actually run hot. Okay, they use the word run hot, but to some kind of level that is uncomfortable before they start taking action. I.e., there's a camp of it, right, that is still in the stage where they believe that, hey, this ongoing global inflationary pressure that we see across the board from commodities spreading over to businesses are kind of more of a base effect and temporary, or rather they are view that it's haven't comes to a point that it will be persistent. So to me, the Fed minutes, right, I believe that there's still a camp of Fed officials that are still debating among themselves that, hey, is this the situation? Is this the year? I would say this year for the time to actually temper. Then after that, I look at the way the market price based on the Fed Fund futures. So we're talking about the Fed Fund futures rate. Based on the pricing of the Fed Fund futures from CME, so I start to look at the meetings in September. Okay, let me take a quick look again. From September meeting to November meeting and December meeting. So the next rate hike, we talk about 25% basis rate hike from 0 right now. The probability of it is still very, very low at 11%. Okay. It's only up about 2% a month ago. Okay. After the release of Fed minute. So to me, from what I look at here is that market expectation are still saying that, hey, Fed fund rates will still going to be 0 until the end of this year. Tapering wise, it's 50-50 right now. So, but for what I look at it over here is that, especially on the FX market, for the dollar perspective, the dollar still remains weak. You look at the dollar index, it still remains its 20-day moving average below it, and still now it's testing about the low that was seen last year in since the start of this year. So it's a close about about 5 month to 6 month low at this point in time.
Kelvin, thanks for your insights.
Thank you, Brian. I'll see you again soon.
Yeah. So we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Please check out www.biztech.asia for business and technology conversations. Also, please like and subscribe to our LinkedIn and Facebook pages. Thanks again for tuning in.